This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, July 22, 2026, and this is the Tokyo session. Now, let's get into it. Bitcoin is holding its breath at $65,988, hovering just below the 66,000 mark, while the Fear and Greed Index screams extreme fear at 14 out of 100. Meanwhile, Ethereum is quietly outpacing the flagship asset, posting a gain of plus 0.99% to trade at $1,936.72. We're watching a market split down the middle. Institutional leverage has vanished, but retail capital is hunting for yield elsewhere. Good evening, this is ShadowQuant Crypto Edition. Let's look at the schedule. There are no major U.S. economic data releases or central bank decisions scheduled for the remainder of this session. However, the market is fixated on corporate filings and legislative developments. Specifically, we are monitoring the PayPay IPO filing updates for Binance Japan, which are expected to evolve through the Asian session. Additionally, any movement regarding the U.S. Senate Housing Bill's inclusion of a CBDC ban will serve as a secondary catalyst. These are not hard deadlines, but they define the regulatory horizon for tonight's trading.
On the PayPay front, the key metric isn't just the filing date, but whether Nasdaq approval signals a shift in capital controls for Japanese retail flows. If that gate opens, we might see a surge in spot buying power that contradicts the current extreme fear reading.
Here is the snapshot. The total crypto market cap is sitting at approximately $2.33 trillion, down roughly 0.23% over 24 hours. Bitcoin is leading the decline at minus 0.35%, while Ethereum is defying that gravity with a plus 0.99% move. Total 24-hour volume is robust at $66.03 billion, suggesting that despite the gloom, liquidity hasn't dried up, it has simply moved. Turning to the news wires. CoinDesk reports that PayPay, which owns 40% of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. Simultaneously, Cointelegraph notes that Iranian crypto outflows have spiked 700% following recent U.S.-Israeli airstrikes. And finally, TD Securities is publishing research identifying NYSE tokenization as a potential institutional turning point.
The PayPay IPO is the most tangible flow variable here. That $1.10 billion figure represents fresh, regulated entry capital into the Binance Japan ecosystem. If that capital rotates into spot pairs, we could see localized volume spikes in yen-linked pairs that don't reflect globally in the dollar-denominated order book immediately. It's a structural inflow, distinct from the geopolitical leakage we're seeing elsewhere.
But let's not confuse a corporate listing with market-wide liquidity. The 700% spike in Iranian outflows is a hemorrhage, not a deposit. That kind of volume entering the market as sell pressure is what creates the slippage we saw in the lower timeframe charts earlier this week. The PayPay IPO is a future possibility. The Iranian exits are happening right now, draining reserves from Asian and European exchanges.
And that drainage is precisely why we are stuck at 14 on the Fear and Greed Index. The sentiment isn't just reacting to price action, it's reacting to the uncertainty of where that liquidity is going. When you have 700% outflows, traders aren't looking at charts, they're looking at wallet trackers. That fear is sticky because the source is political, not cyclical. Let's dig into Bitcoin first. It is currently at $65,988, down minus 0.35%. The anchor asset is struggling to reclaim the $66,000 handle.
Technically, the $65,988 price action is testing the lower bound of the recent consolidation box. The 24-hour low was $65,537, and we are currently hovering just above that. If Bitcoin closes a daily candle below $65,537, we expose the $65,000 psychological support. Right now, the structure is neutral or weak, defined by the inability to push back toward the 24-hour high of $66,674.
That weakness is structural. Bitcoin futures demand has collapsed to levels last seen in 2024. There is no leveraged bid support holding this line. The spot buyers are absorbing the sell pressure, but without the derivatives market providing a cushion, every dip gets sold harder. Core Scientific's disappointing Q4 results also signal that mining revenue models are under strain, reducing the hash rate defense budget. The network is secure, but the commercial backbone is retreating.
Exactly. And here is the risk. With VIX at a calm $18.65 dollar, traditional markets are pricing in a soft landing. But crypto is pricing in a liquidity crisis. That divergence is a trap. If equities suddenly realize they are mispriced relative to the crypto stress, the correlation will snap back violently. You are holding a fragile spot long position on Bitcoin, while the leverage that usually defends these levels has walked away.
Moving to Ethereum. It is trading at $1,936.72, up plus 0.99%, with a 24-hour high of $1,952.51.
This is the anomaly. While Bitcoin grinds lower, Ethereum is holding above the $1,910.77 24-hour low. The key technical level here is $1,950. We saw a touch of $1,952.51 earlier, but it failed to hold. If Ethereum can reclaim and hold $1,950 on rising volume, it breaks the bearish cross with Bitcoin dominance. Currently, it's a tight range between $1,910.77 and $1,952.51, but the directionality is clearly upward relative to the rest of the market.
It's relative strength born of necessity. As I noted, Bitcoin futures are empty. Traders are rotating into Ethereum because it offers actual yield and utility via staking, unlike the barren Bitcoin futures curve. But notice the volume. Total market volume is $66.03 billion, yet Ethereum isn't seeing a massive individual spike. This suggests the buying is cautious, likely algorithmic rebalancing by funds trying to maintain target weights in a shrinking pool of assets.
Sentimentally, this makes sense. The community isn't abandoning the broader ecosystem. They are abandoning the digital gold narrative temporarily. The fact that we have a 7-day fear and greed trend rising from 12 to 14 suggests the panic is exhausting itself. Buyers are stepping in at $1,910.77 because they know the macro backdrop hasn't changed, even if the geopolitical noise is loud.
Don't mistake caution for conviction. If Bitcoin drops to $65,537, Ethereum will follow. They are correlated enough that this decoupling is likely temporary. The risk here is that the yield narrative gets crushed if the broader risk-off environment returns. APT is up plus 2.39%, and Uniswap is up plus 2.04%. Those are the real winners, not Ethereum. Ethereum is just the lesser evil right now.
Let's look at the leaders. Aptos, or APT, is up plus 2.39% to $0.62. Uniswap, is up plus 2.04% to $3.78. Cardano, is gaining plus 1.37% to $0.17.
APT is showing clear relative strength against the macro headwinds. Trading at $0.62, it is held above its recent lows despite the general market drabness. The technical setup suggests accumulation in the sub-dollar range. Similarly, Uniswap at $3.78 is holding well above its 24-hour low of $3.66. These are not breakout charts, but they are holding floors. The 24-hour high for APT was $0.62, and for Uniswap it was $3.85. Neither has blown through their respective highs, indicating controlled buying rather than fear of missing out.
The flow data confirms this is a utility rotation. We are seeing inflows into decentralized finance infrastructure, Uniswap, and newer L1's APT, because the old guard, Bitcoin, XRP, Dogecoin, is being dumped. Look at the laggards. XRP is barely flat at $1.14, and Dogecoin is down minus 0.11% to $0.07. Capital is fleeing passive stores of value for active protocol usage. This aligns with the TD Securities report on tokenization. Institutions are interested in the pipes, not just the water.
Retail is chasing the APT narrative heavily. In the communities, the sentiment around Aptos is optimistic because it feels new, whereas Bitcoin feels heavy. But be careful. When sentiment gets too uniform, it becomes a fragility point. The fact that APT is up nearly 2.5% while the broader market is red shows it is vulnerable to sharp reversals if profit-taking hits.
And that brings me to the biggest risk flag. Chasing APT at $0.62 without volume confirmation is suicide. You are buying a dead cat bounce in a market where Bitcoin futures demand is at multi-year lows. The VIX is low, yes, but that comfort is false. The Iranian outflows are a wild card that can wipe out these small-cap gains overnight. The only safe play here is the divergence itself, shorting Bitcoin, longing Ethereum. But even that is risky given the geopolitical uncertainty.
Finally, let's look at the laggards. Near Protocol, NEAR, is down significantly at minus 3.71% to $1.86. Stellar, XLM, is off minus 1.95% to $0.18. And Bitcoin Cash, BCH, is down minus 1.47% to $220.31.
NEAR is testing critical support at $1.86, which happens to be its 24-hour low. A break below this level exposes the next psychological support around the mid-80 cents. The chart is ugly. XLM at $0.18 is also failing to hold the $0.19 handle. These are payment-focused chains losing favor as the market prioritizes smart contract utility. The technical break below $0.19 for XLM is a clear sign of distribution.
The core scientific miss hurts BCH specifically. As a legacy payment coin, BCH relies heavily on merchant adoption and mining profitability. With hash rates coming under pressure from miners like Core Scientific cutting costs or restructuring, BCH loses its competitive edge. The flow of funds is leaving these legacy assets entirely. There is no institutional bid here. It's just retail trapping itself in outdated narratives.
Which brings us back to the CBDC ban in the Senate Housing Bill. For privacy-centric or decentralized payment layers like XLM and BCH, regulatory clarity, or lack thereof, is toxic. If the ban passes, these assets face existential questions regarding compliance. The market is pricing that risk in right now. The drop in XLM and BCH isn't just technical, it's anticipatory.
So, where does that leave us? We have a market in extreme fear, driven by geopolitical shocks and a collapse in institutional leverage. Yet, within that chaos, Ethereum and specific utility tokens are finding footing.
To synthesize, Grid highlighted that Ethereum is holding $1,936.72, while Bitcoin stalls at $65,988, creating a divergence. CIPHER explained that this is due to a flight from passive stores of value to active decentralized finance yields, fueled by the pay IPO potential. SPECTER warned that this entire structure is fragile, resting on a bedrock of evaporating Bitcoin futures, demand and looming geopolitical risk from the Iranian outflows. Pulse added that while sentiment is at 14, the rising 7-day trend suggests the worst of the panic may be priced in, allowing for tactical accumulation in the winners.
Key takeaways for the night. First, Bitcoin is under pressure at $65,988 with no derivative support, making downside volatility likely if $65,537 breaks. Second, Ethereum is showing relative strength at $1,936.72, potentially signaling a rotation into utility tokens like APT and Uniswap. Third, the extreme fear reading of 14 is accompanied by robust volume, suggesting that while the mood is grim, the market is still actively trading. Tomorrow, watch for the pay IPO updates and any further escalation in the Middle East tensions that could drive those crypto outflows higher. This concludes our analysis for the shadow session. Stay alert, manage your risk, and we will see you next time. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.